On today's episode, we are going to take a look at 3 companies dealing in the 5G market. And the reason we're going to take a look at these 3 companies is today Apple came out, there were some reports that Apple wants to boost their iPhone production by as much as 20%. And this has a lot of stocks pretty excited. Obviously, the first company we are going to take a look at is going to be Apple, right? So Apple right now is traded under the NASDAQ as ticker AAPL, and it's up about 2.5%. Congratulations to all investors that are green today. So Apple, like I mentioned, it has reports that they are asking their suppliers to ramp up the production of next generation iPhones by 20%. Outside of that report on Wednesday, Credit Suisse analysts said that 5G will continue to drive upgrades as carriers expand their footprint of the new faster networks around the world. So we can see there's definitely a lot of built up bullish demand or bullish potential for the 5G market. Obviously, the first one, like I mentioned, we're going to take a look at is Apple. If we take a look at their net sales in their most recent earnings, which ended March 27th of 2021, the company reported about $89.5 billion in revenue, right? Most of it comes from the iPhone. A little bit over than half comes from the iPhone sales, about $48 billion roughly. The others comes from Mac, iPad. Obviously, anything dealing, all these products or hardware products that they do have to deal with 5G one way or another. So definitely this would probably be the first company to take a look at. Apple right now is expected to grow 4.5%. Apple is the biggest company in the market right now. So it's not one to expect to grow at crazy levels, but that doesn't mean it's not one that provides great returns to investors. We can see year to date, the stock has given 15.35% to investors. And right now it is at its 52-week high. So even the biggest companies can still give great returns to investors. And what do you get? With Apple, you get that positive cash flows, you get strong fundamentals, right? Positive cash flow, positive earnings. If you take a quick look at their fundamentals, plenty of cash at hand. They are a bit leveraged in debt right now, but that's okay because of the type of fundamentals that they have, and they put their money to work. Another thing you get with Apple is another 0.6% dividend. So the second company we are going to take a look at is Skyworks. Skyworks, you guys might know them as Skyworks Solutions, ticker SWKS. But before we go any further, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. Also, check out the 4 stocks I'm planning on buying this week. The video should be on the pinned comments. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So Skyworks Solutions is up about 1.4% on the day after Apple kind of released that news that or reports have been announced that Apple is increasing that production. Main reason is we can see for 2020, for the full year of 2020, Apple was accounted for 56% of Skyworks Solutions. So obviously, if reports are saying that Apple is increasing demand, it means great thing for Skyworks Solutions. They kind of provide semiconductor products for the overall radio frequency market. And this is something needed in the 5G world, right? The main markets that they hit are the mobile, internet of things, the emerging markets like automation, like medicine, augmented reality, virtual reality, and also the automotive market. In their most recent earnings, which were Q2 fiscal year of 2021, which they reported April 29th of 2021, they saw 53% year-over-year growth. That is insane. They also had operating cash flow from operations of $616 million. And I think that's one of my favorite things about Skyworks is that's over 50% operating cash flow margins. So fundamentally, I know we're gonna see this company is doing pretty big. And some other recent news on May 12th of 2021, Skyworks kind of did a $1.5 billion senior note offering. They are kind of doing an acquisition of a company called the infrastructure and automotive business side of Silicon Labs. and they're building up that cash position right now for that acquisition. If we take a look at their fundamentals, Skyworks is expected to grow 6.1%. Another not that heavy grower company expected by analysts. I do believe it might be it might be a bit conservative with those numbers. They are positive in earnings. They are positive in cash flow from operations. If we take a look at their balance sheet, it looks super strong, no debt. But remember, they kind of just did that offering, which is going to increase that cash, but also increase the debt that this company has. Regardless, still a very strong balance sheet for sure. And fundamentals. This is another company that pays a dividend 1.05%. So this title could be either three 5G companies or 3 dividend plays, because the final company we're going to take a look at is Qualcomm. So Qualcomm, you might know them from their processors that are being used in a lot of phones, especially some of the gaming phones out there. You might know them from Snapdragon, right? So they have a lot of 5G products. They have stuff, again, like processors. They have stuff that deal with antennas and mobile communications for the mobile world. Again, that's not only just the smartphones, right? That's everything from tablets, from Internet over Things, wearables, and so much more. So Qualcomm right now is up 2.1%. Again, I do believe it's all because of that Apple news. It's right now sitting at $144. NASDAQ QCOM. It currently QCOM. It currently has a market cap of $162 billion. So another big company. If we take a look at their most recent earnings, another strong revenue grower, right? Revenues were up 52% compared to same time last year. This is insane. Qualcomm, right? I mentioned that they're mainly in the mobile kind of world right now, but they recently did purchase a company called Nuvia, which deals with CPU products in the more laptop segment. So they did purchase that company. And right now, the new CEO eyes to kind of create that laptop market. Qualcomm will start selling Nuvia-based laptop chips next year, so 2022. They are expanding their product line. This is one I actually like a little bit. I think this is the one I like the most, Qualcomm. So if we take a look at their fundamentals, they're expected to grow 5.5%. Another one not expected to grow much by analysts. At the same time, I do believe it might be conservative numbers. They are positive in earnings. They are positive in cash flow from operations. They have a nice amount of their balance sheet looks good. $11.5 billion in cash, $15.1 billion in debt. But remember, they have such a strong balance sheet that I believe it's okay for them to be a bit leveraged. They also pay a nice dividend of about 1.9% at these levels. Now I want to take a quick look at their technicals. Let's start off with Apple. Apple, I just want to say one of the main yellow flags I have is the stock price is a bit overextended. This doesn't mean a pullback is guaranteed. I just believe the risk is a bit higher. If we take a look at Skyworks, Skyworks does seem a little bit overextended, not as much as Apple, but there's still some risk. Next with Qualcomm. Qualcomm I think is probably the one least overextended compared of the three. Again, nothing here tells me if I should buy or sell. It just tells me, hey, Jose, there might be a little bit more risk at the moment. Next, I want to take a quick look at valuation metrics, and I'm taking a look at EV to EBITDA forward ratio. Let's start off with Apple. Apple right now, it's not the most expensive it's been, but I want to say compared to its average, it's a bit higher than its average number, right? Right now it has a forward EV to EBITDA ratio of about 22.23. If we take a look at Qualcomm and Skyworks, I think the situation is different. They are, again, nowhere near overextended from their all-time highs. I want to say Qualcomm is, Skyworks, my apologies, Skyworks is a bit, I want to say, properly valued compared to what it was in the past. I think Qualcomm seems to be a bit undervalued compared to where it's been in the past. Again, this doesn't tell me much. It just shows me, again, how much risk or reward, how much risk there is at the moment. So I hope you guys enjoyed those three stocks. Like always, make sure to hit the thumbs up. Make sure to share this video if it provided some value to you. Take care, see you next time, and peace out.